Hi everyone, my name is Wanga a lawyer at MMS Advocates LLP. I'm here today to take you through a continuation of our tax series, and today I will be taking you through the digital service tax. There are a number of areas I will focus on, including the scope of the digital service tax, how the digital service tax is calculated, who has the responsibility of paying the digital service tax, as well as the consequences of non-compliance. The tax was first introduced in 2020 through the enactment of the Finance Act 2020. It's a new tax in the Kenyan tax regime, and therefore it's new tax that needs to be charged at the moment. So the tax is applicable on businesses that are carried online, that is digital market space. And under the regulation that were introduced in 2020 that took effect now 2021, the taxman defined the digital market space as any platform that allows the interaction between a buyer and a seller, and at the end of it there's exchange of products at a consideration. So that's what the digital service tax revolves around. It is a tax charged on the transaction conducted by this online platform on digital market space. We have a variety of areas, starting with the streaming and downloading content from the online platform. So a good example of the streaming platform is like YouTube. If you are streaming on YouTube and the developers of YouTube make income out of it, then they are required to remit the digital service tax. If you want to download anything from these internet sources, including that YouTube, or rather watching these online videos and series, like for example, if you want to subscribe to be watching a Netflix, so Netflix developers are required to remit the digital service tax. So that's for the first scope. When you are streaming and downloading content from online platforms and the developers or the owners are making income out of it, they are required to remit the digital service tax. Another area where the digital service tax is applicable is on e-learning platforms. If there's an institution that is rendering online learning and they are making income out of it, those institutions are required to remit the digital service tax. Another area is where you have a business in which you sell your tickets online. An example is these cinema companies. If you sell your tickets for customers to attend a live show, once the payment has been done by the customer, you are required to remit the digital service tax. Another area where the tax is applicable is on these subscription-based medias. You have seen on several occasions there's these short messages revealing maybe breaking news. So the people who are responsible for coming up with these short messages that gives the ultimate consumers the news at a chargeable fee, they are required to remit the digital service tax once they have collected the fee from the consumer, or rather the targeted client. So those are the areas within which the digital service tax is expected to apply, and it's a matter of wait and see how the Kenya Revenue Authority will be implementing the adherence to the tax requirements. The tax is calculated at a rate of 1.5% of the gross transaction value. And gross transaction value in this case means the value received as payment for the use or utilization of the service rendered by any digital service provider. So that amount that the digital service provider receives as payment, that is what we call the gross transaction value. So 1.5% of that amount is what will be remitted to the taxman, or the KRA, as the digital service tax. This tax accrues immediately the payment is made. So once the service provider has received payment, at that point that tax accrues, and it's always paid by the 20th day of every month upon collection of that digital service tax throughout that period of the preceding month. Another aspect that you need to note, that when it comes to foreigners, or rather digital service providers who are based outside Kenya, they are required to have tax representative in Kenya who will be responsible in collecting and remitting the same tax to the tax authority. So what the taxman does to identify where the user is they monitor the device that the user is. So if your device, be it a computer, be it a mobile phone or a tablet located in Kenya, another thing that the taxman looks at in order to identify the locations of the users is the internet protocol address. So if the internet protocol address that you are using is registered in Kenya, the taxman will be able to tell that this consumer is consuming these services and is based in Kenya. Another thing is the payment mode service provider. If you use payment service provider mode that is registered in Kenya, from that aspect, the taxman will be able to tell that the user was located in Kenya, he made payment via the registered mode in Kenya, and therefore the end digital service provider will be required to remit the digital service tax. Finally, the taxman also looks at the registered business address of the user. If not the registered business address, the billing address. So all these inform the taxman where the user is located in order to place liability on the digital service provider for him or her to remit the digital service tax. Now, the income tax digital service tax regulation 2020, which introduces the digital service tax, places the liability of remitting digital service tax to the digital service provider. So the digital service provider is the one who is responsible in remitting this tax to KRA. If the digital service provider is located outside Kenya, like earlier I'd said, he needs to appoint tax representative in Kenya who will be responsible to do the remitting. Where the digital service provider is unable, or rather a foreigner is required to appoint a tax representative in Kenya. That tax representative will be responsible in collecting the payments on behalf of the foreign digital service provider, and later on deduct the digital service tax from the amount that they have collected and remit it to the Kenya Revenue Authority. The regulations also places upon the digital service provider the responsibility of ensuring that they keep records of the transaction that they have conducted. The record keeping requirement is required to be done for at least 5 years, so that at any point when the taxman or rather the authority wants the record for purpose of investigation or rather auditing to see whether the digital service provider has been remitting the required digital service tax, they can access the records and do the investigation. Failure to comply with other forms of taxes where fines are usually imposed or criminal sanctions. As well, when it comes to digital service tax, if you fail to comply as a digital service provider, what the authority is obligated to do is to bar you from accessing the digital market space, and at the end of it, that means you won't be able to access your end clients to conduct your business. So you will be barred from accessing the digital market space completely until such a time when you will have meet the tax requirements and paid the required digital service tax. Then they can consider getting you back to the market and you comply going forward. I hope that has been useful, and I trust that you will keep watching our subsequent tax series going forward. Thank you.